Hey there, Steve Rubis with another installment of Investor Relations in 2 minutes or less. Today we're going to talk about one of the most overlooked and unthought of press releases that Investor Relations produces. And that's the document that schedules your earnings release ahead of time. Most investor relations professionals think of this as an afterthought or a check the box document. Hey, whatever, it doesn't matter. But the reason it's so important is it's a document that shows that you respect the time of your investors. And one of the biggest issues for management teams is that they hate having their time wasted, and they're constantly pushing back on investor access, et cetera, meeting with the same investors because they don't want to waste their time. Well, just as importantly, you need to show that you care and respect about the time of the people who have invested in your company. And the reason this is an issue for the buy side is that the buy side doesn't want to be caught flat-footed if you report overly positive or overly negative news. The sell side needs to know when you're reporting so they can allocate resources accordingly, given that they have another 10 or 20 other stocks that will be reporting in or around the same time. And then retail needs to know when the earnings releases because they want to be able to do their own trading. So if you want to know one of the easiest ways to lose credibility in investor relations, don't schedule your earnings release ahead of time. Do yourself a favor, schedule it, realize that as much as this is an afterthought, it's actually really important. And the topic has come to mind because recently, after 15 years on Wall Street in investor relations, I see this happening constantly in biotech. And two stocks that I own, Cyclerion Therapeutics, ticker CYCN, and Myovant Sciences, ticker MYOV, favorite stock of mine, has an open investor relations position. Myovant just dropped its earnings release today without any warning. And you could have tried to triangulate by adding 90 days to the last earnings release, but you end up with a week to 10-day range. It's not scientific enough. So remember, if you're a company that's public, do yourself a favor, schedule your earnings release in advance and maintain your credibility with your investors. So if it happened in investor relations, I lived it, so you don't have to. Thanks for watching.